Ladies and gentlemen, welcome to the main event of the evening. In this corner, weighing in at $1, wearing blue trunks, we have USDC, the reigning champion of stablecoins. And in the opposite corner, weighing in at $1 as well, wearing green trunks, we have USDT, the challenger. Who will come out on top in this stablecoin boxing match?
This event is sponsored by Blockchain Animations by NFT Explained, where complex topics are made simple through animations, stories, and entertaining examples.
Before the match begins, it's important to note that there are a number of different types of stablecoins, including fiat-collateralized stablecoins, such as the two in the ring today. Fiat-collateralized stablecoins are cryptocurrencies pegged to a fiat currency and backed by reserves of that currency. We have a full video covering every type of stablecoin and how they work, which we will link at the end of this video. Let's get to the first of many rounds.
Round 1. Market capitalization and volume traded.
Tether holds the title of the largest stablecoin in terms of market capitalization. Currently, it sits just shy of an impressive $80 billion market cap, doubling that of its primary competitor, USDC. Tether's growth in market acceptance and use, a topic we'll explore in depth, has been further fueled by USDC's recent scare with Silicon Valley Bank. USDC boasts a market cap of just over $34 billion, and has enjoyed rapid adoption since 2021, fueled by a growing interest in decentralized finance. Being built on the Ethereum blockchain, USDC offers some DeFi features, which enables it to tap into the security in decentralization provided by the Ethereum blockchain. However, following USDC's surge in market cap, the coin faced a setback when Circle Financial, the coin's issuer, announced that $3.3 billion in cash backing USD coin was affected by the collapse of Silicon Valley Bank. This led to some instability in the coin's peg, though it has since stabilized at the $1 mark. Overall, Tether emerges as the undisputed champion in this round, thanks to its significantly larger market capitalization. Furthermore, Tether has significantly higher trading volume over the past 24 hours, which could be attributed to its extensive usage. This is no surprise given its bigger market cap.
Round 2. Parent company and transparency.
iFinex Inc., the owner of Tether, has faced some controversy regarding its transparency of reserves. Up until March 2019, Tether claimed that its stablecoin USDT was backed 1-to-1 with USD reserves. However, Tether modified its website stating that it was 100% backed by reserves, which could include non-cash assets or loans in addition to cash and cash equivalents. Since then, Tether has cleaned up their act by providing a reserve breakdown, with the most recent one showing that just over 82% of funds are in cash, cash equivalents, other short-term deposits, and commercial paper. This is further broken down, and Tether shows that just over 71% within that sector is made up of US Treasury bills. Tether's parent company also agreed to pay $18.5 million for a settlement with the New York Attorney General. The lawsuit alleged that Bitfinex, which is a crypto exchange that is also owned by Tether's parent company, improperly used Tether's reserves to cover up $850 million in losses. Both Tether and Bitfinex are now required to submit quarterly reports for the next 2 years, and New York residents can't trade with iFinex Inc. Tether and Bitfinex refused to admit to any wrongdoing and stated, "We share the Attorney General's goal of increasing transparency." Circle's USDC is generally agreed to be the winner of this round due to its long-standing transparency. Since October of 2018, Circle has provided monthly attestations by third parties like Grant Thornton and Deloitte, which are two widely recognized accounting firms. It's important to note that these monthly reports are attestations and not audits, as audits are considered to be a more comprehensive review. That being said, Circle has provided a higher level of transparency and is therefore the winner of this round.
Round 3. Ability to remain pegged at $1.
Both Tether and USDC have remained relatively sturdy, deviating from the $1 peg by only a few cents, except under extreme market conditions, which we will further investigate. During the collapse of Terra Luna, Tether briefly dropped to as low as 95 cents as investors quickly withdrew more than $3 billion in transactions. However, Tether was able to handle this challenge and quickly regained its peg. Experts suggest that the depegging was driven more by market sentiment rather than by a lack of reserves. Tether's resilience in being able to process such a large amount of transactions and its quick recovery in regaining its peg demonstrate its strength in the stablecoin market. Circle has also shown to be very promising. Despite facing market volatility during the collapse of Silicon Valley Bank, Circle has demonstrated resilience by only briefly deviating from the $1 peg before regaining its stability. However, the bank's bankruptcy led to a dip in USDC's value, dropping to as low as 87 cents before recovering. Nevertheless, Circle's commitment to maintaining the stability of the USDC stablecoin was evident when it announced that it would use its own corporate resources to cover any shortfall in its reserves. This move showcases Circle's dedication to ensuring the reliability of USDC, even if it means putting its own resources on the line. Both stablecoins were able to keep going regardless of being hit by strong punches, making it challenging to say who the clear winner of this round is. Let us know who you think won this round and which stablecoin you think is safer overall. Following the depegging of the two largest stablecoin, it became evident that stablecoins require more transparency, but implementing regulations for them will likely be a lengthy process.
Before the event ends, we want to say that we're not financial advisors and that the information we're sharing is for educational and entertainment purposes only. We cannot definitively say which stablecoin won the fight, but it may be wise to consider diversifying your stablecoin holdings, which could include using decentralized stablecoins such as DAI. However, it's important to note that each stablecoin has its own set of risks that should be thoroughly researched before making any investment decisions.
We hope you learned something new and we hope you hit that subscribe button. Definitely check out our explanations on DAI and our explanation on the different types of stablecoins.